Hey traders, Raghee here, and in this update we're going to do something we've been doing weekly, which is keeping an eye on the overall move in crude and taking advantage of pullback buys. Now I will say September crude just recently lost its double green uptrend, and it has a lot to do with these two candles right here, and that just added a certain neutral price action to what has been a very slow but steady climb higher. This is going to change where I'll be open to buying crude again. And we're coming into a volatility event by way of the API, which comes out Tuesday at 4:30, to the EIA, which comes out Wednesday at 10:30. And that could create a move to the downside. And if we get that kind of correction, what I'm looking for is the 34 period exponential moving average on the close, which is this middle moving average, that yellow line, the 34 EMA on the close. Now we've hit this a number of times. So is there any importance to that level from a volume standpoint? So really the two levels that are standing out from a volume standpoint are up at about 41 and also 40.70. So I'm really talking about whether or not 39.85, 39.90 would be relevant. So we'd have to break some volume levels to get down there. But nonetheless, this is not the same quality uptrend, and I'm going to keep that in mind. Here's a really easy way to look at how I would segment out the entry zones. This would be considered aggressive. This particular level would be ideal for options, the QM mini, or a very small position size in the CL. This level here, kind of the lower 2/3 of the range between the 34 EMA on the close and the 34 EMA on the low. This is the low right here. So this level would be ideal for the full size, for more options or more QM. The bottom line is this level, this zone I should say, will have a larger position size cumulatively than the upper third. The upper third's aggro, the lower is more conservative. So we've segmented this into two zones using the 34 exponential on the high to the close and the close to the low. Now, again, what would create the move to the downside? That's going to be tomorrow. We're going to see some volatility from the API, but it's the reaction the EIA has to the API, the way the API sets up expectation. That's going to be, if anything, what creates the move to the downside. Now, the last time we got in this trade was on this particular candle. So I'm really grateful for this candle, even though it knocked this daily time frame out of the really nice double green uptrend that it was in. I'm super grateful because we got our aggro, moderate, and conservative entries. The conservative was down at 38.85, way down in here. And we just hit target 1 today. So really what I'm talking about is looking for another opportunity, but I'm changing the way I'm going to engage this market. I'm still going to treat it as a bullish market, but I'm going to be looking at it from a standpoint of a little less bullish, a little less likely to punch up to higher highs, but still buyable. So there are the zones. That's what I'm looking at. And the catalyst will be tomorrow at 10:30. Now, it doesn't have to be that time, although that's maybe a time we could see some good price movement ranges, but it could be any old time. So what I would recommend is either putting an alert in this area, and then in this area, I actually park the limit orders. I'll put my limit orders in, and that would, if I can get a 39.05 entry, I'm absolutely fine putting a limit order in at 39.05. If I could get a 39.55 entry, I'm totally fine parking those limit orders. Limit orders are conditional orders, so I can just leave a good till cancel, limit buy for 39.55 and 39.05. Those are lower ends of the range. I'll keep those out there in case we get some crazy wick and we just get down there so quick, my order is going to be waiting and I can get filled. If not, tomorrow as we start to calculate what the price movement ranges are, I can get a better idea of what I'd like to do with crude. So what are the price movement ranges as we wrap up this conversation? I'll be looking for price movement tomorrow minimally along the lines of $2.50, but up to about 3.25. I'd love to see a 2.5 to 3.25 move, capitalize on that as a retracement to the downside. And once again, as we've done about 4 times prior, just take advantage of this somewhat boring, but pretty predictable continuation to the upside without expectation for this market to just run up through 42.50. All right, we're looking for movement to the downside. We'll buy that and we'll just ride it right back up into this area of resistance as we have now a couple times. All right, hope that helps. I'll see you in the next update.